Hi everybody, it's Andy Phillips here, and welcome to. This is the fourth part, isn't it, Mark? We've got Mark Barrett here. Hi, Mark.
The final one of the series on
Final one of
FHL
the series. Today we're going to be going into the rent to SA operator, and it's going to be looking at things like the VAT and TOMS and stuff like that. So I think we better kick it off and let's get rocking.
Let's get on with
If you want to get your presentation up, get it up.
The presentation is up, and hopefully that's visible.
Go. There we go. Yeah, that's up and running. Okay.
Great. Well, hello everyone. So rent to SA operator is today's topic. It is the fourth in the series. I usually just crack on and zip past this screen, but allow me to loiter on a minute. FHL SA, by now, if you haven't twigged it, it is very specialized stuff. So within this introduction, you'll notice I've used a phrase in there that it's we have a full specialized accountancy and consulting service. You really please don't do this with the sort of high street accountants. It isn't going to work. We're dealing with several now where they've done that, they've got it wrong, facing horrendous problems which we're trying to fix. So if you're going to be involved in this market, it's very profitable, but please make sure you use the specialists. Usual health and warning and wealth warning here. The presentation I'm providing today is not advice. Got the words wrong straight away. This is not advice. This is where I'm just trying to give you the clue about the various topics so that you can explore them. I will explain a bit more about the detail that's necessary in this particular topic when we get to TOMS, but this is an important slide. Please pay attention to it. So this is one cohesive story. We've done 4 presentations now, and all of them belong together. Okay. Rent to SA is probably, of all of the FHL SA businesses, the most popular one. So there's a possibility that people are just going to go to this one and not watch the rest. Please don't do that. It's like opening a book and going to the last page to see who'd done it without actually knowing any part of the story. You won't get it. You will not understand the story unless you're looking through the series. Yes, it's a lot of time, but it's an important topic. So don't just watch this one presentation. The first presentation was all about the overview of the market. What is FHL? What distinguishes it from owning a property? Now we know about Section 24, the relief on property, etc. Let's get some of that detail in there. Just get some distinguishing factors. The second presentation all dealt with the owner operator. You own and operate an FHL, furnished or letting. What defines it? How does it work, etc. Now that's really important to the rent to SA operator, because these are the people who own the property. You need to know what your customer looks like. So if you're doing a rent to SA business, you really need to know if your client is themselves operating as an FHL owner, or are they operating as just a property investor? So you really need to know what your property owner looks like, and that's why we've done that topic. Okay. The third one was dealing with the SA agent. Now, your work as a rent to SA operator can be looking like the work of an agent. So the distinguishing factors, really important. So please, it's one cohesive story. You need to pick all 4 up, take them in sequence if you can, please. And then I hope, have some understanding. Okay. Without it, you're going to miss a nuance, and that's where you're going to come into trouble. So let's crack on. Defining the SA operator. If you've seen it in the other presentations of mine, we always talk about should you be a company, should you be an individual in your own name. Pretty much, I don't know any rent to SA operators that aren't doing this as a company. So it's a bit of a shoe-in on this one. You're going to be a company. And this is a company, excuse me, that takes full responsibility for the use of the property, and not the fabric of the property. So it's that distinguishing factor between you're using someone else's property, but it's not your property. You're not having to look after the fabric. So you can see that I've highlighted the word use and I've highlighted the words fabric. These are the important factors. Okay, we're going to talk about the fabric later on. So as the operator, what do? Well, you find the guest who wants to stay in these properties for a short term, less than 28 days. That looks a bit like an agent now, doesn't it? Okay, so you can see how these things are blurring on the edges? Okay, but the operator provides the accommodation and the services completely independently of the property owner. You manage everything, and the owner is undisclosed. As far as everyone's concerned, the only person they deal with is you. There's no one behind you. You just happen to have these properties. Big distinguishing factor there. So you can see how these nuances are coming in now. So in reality, it's like operating as a tour operator. I deliberately picked that language, and those of you who are in the market will understand I'm going to be talking about TOMS, which is where tour operator comes from. So, but think about it. It's just like going to the travel agent and saying, I want to book a holiday. I want to use that hotel, that space, that building, whatever, and you facilitate everything for them, right? They never need to talk to who the owner of the property is, okay? So it's a bit like that, okay? Accounting for the SA operator, sorry, excuse me a second. Okay, accounting. Look, I know I say it all the time. You've got to ensure process accounting and record keeping are right. I say it for every single business. I don't care what your business is. You've got to make sure your processes, accounting, records, etc. are absolutely spot on. But particularly with VAT on this one, really, really important, because if you get it wrong, any of these nuances, I keep using the word, sorry, but any of these features wrong, it can have dramatic consequences for you. So I know I say it all the time, but this time, please listen. This particular slide in the section I'm going to do now, I'm going to keep referring back to it. So if you happen to be watching this on the catch up or whatever it is, you might need to come back and look at this again. But these aspects are going to be the important parts now. We've got to look at every single booking individually. And that sounds weird. Is the guest staying short term? Well, if they are they less than 28 days? Great. Now, we can have the situation where a person is booked for less than 28 days, they've had an accident, they're ill, something, they stay over. That's fine. There are rules about that, that's fine. But are they booking and intending to be short term, and the longer term becomes an exception? Or did they actually book to stay long term? Now, we know that during the period that we've just been through in 2020, lots of people had FHL SA property and they were letting them out. That's fine. You need to go back to previous presentations to understand how that works. But that's fine. If they're now booking long term, you've got to distinguish them from the short term. We now got to look at the properties. Is the property owner disclosed? Because that will trip you into being an agent. Are you the property owner? Because remember, I've talked about you've got exclusive use of the property, but you're not responsible for the fabric. But hang on a minute, if you are responsible for the fabric because you're the owner, well, then you're actually an FHL operator. You're not a rent to SA operator. Hopefully that's making sense. We're trying to distinguish you from all of the other facets of this business. And how are you getting paid? Now, you could be renting in the property under a rent to SA, the normal conventional method. Could be that you've done some sort of profit share, commission, I don't know. If you've got some weird and wonderful method of getting paid other than straight renting in the property at a fixed price, you're taking risk, then that will affect us. And we're going to have to distinguish this within all of the record keeping, all of the accounting, bookkeeping, taxes, all going to be relevant. So as I say, I'm going to come back to this slide. I'm going to keep referring back to these features. I'm not going to put the slide back up. I'm going to keep referring back to these features. So you might need to come back occasionally and have a look at it. Each one's dealt with differently. So VAT. Anyone in the rent to SA market who's watching today will go, oh, shut up, Mark, get on to VAT. Yes, okay, I'm on VAT. Big dramatic headline there, isn't it? Is it make or break time? Ah, scary. I'm going to use some figures. When I do these figures, you may well be looking at this going, Mark, come on, those are not the right figures. I know, they're just figures to demonstrate a perspective. So don't argue with my figures. I'll talk about that in a second. Okay. What I'm going to start off with is looking at the money that you get. So the gross amounts of money that's coming into you. I'm going to use around some numbers. Let's imagine that the sales are £10,000 this week, whatever. Now you've got some costs, and those costs have got to be deducted, paid out of this money. It's a rent to SA operation. You may well have to pay rent to the owner of the property. Let's say you pay them £4,000. Again, don't worry about my figures. Without making a sexist comment, I'm just going to imagine some little lady down the road who does the laundry for you, and you pay her £1,000 to do the laundry for this booking. Maybe her daughter is the one that comes in and does the cleaning. I'm actually thinking of a client when I'm saying this because that's exactly what they've done. So you've got 10,000 coming in, you've spent 4 on the rent, you spent another 2,000 on the laundry and cleaning. Okay, well done. You've got a gross profit, £4,000. Well done. Yes, you've got some overheads. The accountant will need paying, the phone bill, the rates, the electricity, blah, blah, blah. Loads of costs, overheads. But never mind, you've still made £2,000 net profit pre-tax. Well done. This is a profitable business. 20% is not at all an unusual number for a rent to SA operator to make. Quite often you make more than that. But for these figures, I'm just going to use these because they're nice and round. Excellent business. That's why you got in. Well done. £85,001. You're now VAT registered. You're past the mandatory threshold. Now you have to register for VAT. What's that going to do to this booking, to this week's worth of sales figures? So we look at the VAT. Well, of that £10,000 that came in, you now have to give £1,666 to the government. Okay? The figure is 8334 is the plus 20%. That's where the 1,600 quid comes from. Yes, I know what 20% is, but £1,666 of your 10 grand has now disappeared off to the government. Well done. Now, obviously, as a VATable business, any VAT you spend, you can claim back. Great. But the landlord isn't VAT registered. He's just a property investor. He's not VAT registered. The little lady down the road doing the laundry, the daughter, they're not VAT registered. So there's no VAT that you haven't paid any VAT. You can't claw VAT back. That's okay. What about the overheads? Well, some of the overheads will have VAT on, some won't. I've just made, for these round numbers, I've made an assumption that 50% of the overheads have got VAT on them. Well done. You got the VAT back on that. It's £166 worth of VAT you can reclaim. So you owe the government 1,666. You can claim back 166. You've just written out a cheque for 1,500 quid to the government. All of a sudden, this business that was making 20% using this rough numbering is now only making 5 because you've just given 15% of it to the government. Make sense? The 15%, I want to use it in the phrase of yield. It's the government's yield. So they're getting £1,500 out of your 10,000. They're getting 15% of your revenue. They've yielded 15%. You yielded 5. Anyone happy with these numbers? The figures are just examples. I know I keep saying they're just round numbers. I want to make the point. You must go back and look at your business and see what is the effect of this going to be on you. But the government getting 15% yield, as I describe it, that's not unusual. From our experience, 15 to 17% will be a typical yield number. Okay, that's horrible. Maybe you're making more than 20, maybe you're making 25 and you're giving 17. Well, you're still got 8, I agree, it's a bit better, but it's not the same as 25 anymore. So do your own numbers. Look at it this way and say, how is it functioning? Is this a good business if you can pass the VAT threshold? Once you've done that, I think you'll look at it and say, Mark, your heading was realistic. It is make or break time. So there's your scary story. So let's move on. We're now going to talk about the TOMS scheme. I'm going to spend a little bit of time on this one, but I need you to get it. But I'll be talking more about that in a moment. So let's just give you the overview. We'll now repeat the exercise on the VAT yield, but I'll be using the TOMS method. So there's the figures you've just had from the last slide, exactly as it was. Now we're going to put in the TOMS VAT. Okay. What does TOMS mean? Well, TOMS is Tour Operators Margin Scheme. Remember I said right at the earlier slide, do you behave a bit like a tour operator? Yeah, I think you should. The Tour Operators Margin Scheme. Very important. Let me emphasize a word there. Margin. It's the tour operators margin scheme. So the £10,000 coming in wasn't yours. It never was yours. It doesn't belong to you. Now we're talking back to the accounting. How do we handle the bookkeeping for this? Talked about that when I did the SA agent. Please go back to that video. As I said, these all link together. Go back to that video, or that presentation rather, and see how that connects together. Your sales is the margin. It's the £4,000. So we can completely ignore the 10 and we go straight to the margin. Now, what's the VAT on your margin? Well, 20%, therefore 3,334 plus VAT, so hence the reason why I got that number, is £666. We already know that we're going to claim back £166. You're now going to give the government £500 rather than £1,500. The government's now going to yield 5%. Which number do you want to give the government? 15 or 5? Again, I'm using rounded numbers. You've got to do your own. I think it's fairly obvious, isn't it? So that's what the TOMS scheme is. We look at your gross profit. You'll notice that I didn't put the booking fee, Airbnb type thing into that. That's an excluded cost. That is part of overheads, just in case you think I'm going mad and not putting it in there. There's another point I really want to make now. Mandatory VAT registration happens when your turnover gets to £85,000. That's the mandatory threshold. Your turnover isn't based on £10,000 coming in. Your turnover is based on the 4,000. So it's delayed by a long time when you have to get involved in VAT. So it's massively delayed. If you just think of those percentages, it's massively delayed when you register for VAT. And it's collapsed the VAT pain. Is that pleasant for you? Is that what you would like to happen? Then the TOMS scheme is probably the right thing for you. It's vitally important, but that's the killer phrase, isn't it? The government are looking at you saying, we expected to get 15% of all your revenue, but you're only giving us 5. The taxman is not fair. The taxman wants maximum amount of tax. So they're going to jealously guard all the rules. You must obey the rules. If you don't, if you start to read things the way you hoped it was going to say or interpreted it as saying rather than what are the real rules, you'll lose. And the taxman will go up to 15% and you're going to get some pain. So I know I've been heavy with this. It is a heavy topic. I'm facing work at the moment where I've got a person who's got a £300,000 historic VAT bill. if we don't sort out their VAT problem for them. We're working on sorting it out. You don't want to be in that pain. So get this right from the beginning. So, having described why you want it, now I'm going to look at 2 slides only. Some of the nuances. Now, I'm going to stop on this single phrase for a second. The list, this is not exhaustive. Remember, whenever I give you these presentations, I'm talking about these in general terms as being a little bit of education, a little bit of knowledge for you, so you know what the questions are to go back and look at this. If you imagine you come to my firm, and it'd be nice if you did, but imagine you come to my firm, I'm going to want to look at your contracts, I'm going to look at your processes, I'm going to look at your banking, I'm going to look at how you set up your chart of accounts, I'm going to look at everything you do about your business, all the way down to how does a person book, what's the process of booking, what services are you providing, what are you really doing? To do that, I need to educate you as much as I reasonably can. So the information we give to the clients who've engaged us in this process, we give them an 8-page briefing document, and that 8 pages is sufficient to allow them to discuss it with us. That's not enough. It's not finished at 8 pages, but it's a good starting point to get them into a position where they've got some knowledge, and therefore they can discuss it and know why we're discussing this. Okay, so there's no way 2 slides on this presentation is going to represent anything like enough information. I do know that this is not exhaustive. Okay. I spoke earlier on about short term. Were they short term but stayed a bit longer because someone was sick? Did they plan to book later? Each one of these has to be dealt with completely separately. The next slide is on that topic, so I'll do that one in a moment. You're almost at the end of the 4 series now. This slide and one more, and you're done. Do you look and behave like a tour operator? Is that what you're doing? Or do you look like an SA agent with disclosed? Look at who you are, what you're doing. Who's responsible for the fabric of the building? Now, this is a biggie. I've told you that HMRC are not nice. They will interpret rules to suit themselves. Remember, they are not law givers. They read the same legislation, but they can interpret it their way. Now, I always say that you must never read the legislation and try to interpret it to suit you. HMRC do exactly that. Within legislation, it refers to fabric of the building as being what you and I understand as the fabric. It's the walls, the doors, the roof, the central heating, the windows. That's the fabric of the building. Okay. HMRC have, and in writing to us, said no, it includes the beds, it includes the chairs. That's the fabric. Well, when the heck did that ever become fabric? Because nowhere else on tax do we deal with that as fabric. We deal with that as a movable item. Right, a bit of fixtures and fittings. We've actually written back to HMRC saying, thanks ever so much for this definition. Point at the legislation where it said that, will you, please? Because I can't find it. Would you believe we've not had the answer? Of course not. They've interpreted it the way they want to interpret it to try and stop you. Okay. That leads to another point. I know I'm sticking on this one element for a while, but it's important. Do you want to be the one that goes to court to define what the word fabric means and whether a bed is fabric or not? Do you want to have that court cost? That's expensive. So as much as they're not law givers, you may adopt an attitude of saying, really don't want to be involved in fighting them. I will live with their interpretation. Okay. So in all of this, there is a practical reality. We always hear people saying, I'll have my day in court. Well, okay, that can be expensive. I personally would rather you didn't have your day in court. I'd rather that they never asked you a question in the first place. It's just an attitude of mind. Keep it in mind. I haven't put anything about that on the slide. Think about it. What attitude do you want? Do you want to be the risk taker? Okay. Your bookkeeper's going to hate you. I'll tell you that now. Your bookkeeper is going to hate you. Typically, when we get involved with this, what happens is we go through and go, yeah, we think you are Toms, and we give you a report that says we think you're Toms because. We then tell you how to look after it. Your bookkeeper throws their hands in the air and says, hang on a minute, I don't really understand. Then you come back and we look after the bookkeeping for the first quarter usually. Could be 2 quarters. And we teach your bookkeeper. Your bookkeeper is going to hate you. But you were going to give away 15% of all your turnover to this government. You're now only going to give away 5%, again, using my bland numbering. For 10% of your turnover, will you tolerate the fact your bookkeeper isn't very happy? Let me explain why they'll be happy. If any of you have been involved in any other business before, picking up your sales figure, what figure are you going to put in the box on the VAT return that says sales? Okay, it's dead easy, isn't it? You just look at your Xero or your QuickBooks or your Sage or whatever you're using, and you go to the line that says sales. And then there might be some categories. You add them all up and go, yep, that's the figure. Pop it in there then. Super simple, huh? It's a 35-step calculation in the TOMS process. Once you've been operating TOMS for a while, because the history does matter if you've got some own property involved. It can be a 35-step calculation just to get to the figure of what is my sales as far as the VAT return is concerned. So the bookkeeper will hate you. I guess, really. Okay. The final slide and the series of 4 presentations. Mixed use business. I don't think I know any rent to SA operators. Maybe I do. But anyway, the vast majority of rent to SA operators are actually operating a mixed use business. That's because you're entrepreneurs, you see an angle to make some more money, you do it. And respect for you for doing that. So you now got to focus on this transaction by transaction. So somebody's booked. Good. Stop. Look at the booking. Don't rejoice yet. Look at it. What is it? Go back through that slide that I said you're going to have to go back to. Is it short use? Is it long-term use, etc.? Identify this transaction by those criteria, and the criteria that people like me will teach you. And now you account for it in that channel. So it's almost like if you visualize a sort of, I'm a visual person. The transaction arrives and they've got 6, 8, 10 choices to how you're going to account for and deal with this transaction. You must make a judgment and put it down the right channel. That's probably the best way I can describe it. So you've got some guests. You've got guests arriving and they're going to stay for a fortnight. Lovely place that you've got, and they're going to stay with you for a fortnight's holiday. Fantastic. So rent to SA operation, fantastic. We're going to put them down the TOMS route. Okay, that's the channel they're going to go down. Hang on a minute. You've got this wonderful opportunity that somebody wants to use your property for 3 months solid. That's great. You've avoided the voids. Therefore, you've looked at it and said, yeah, this is profitable. I know I'm not going to charge quite the same price, but now you've got to take into account the VAT, because this cannot be TOMS. It must be long stay because it's more than 28 days. So it's VATable. How are you going to deal with it? Now, there is this thing called the hotel scheme. Again, we will advise you if you're coming to us, but whoever you go, whichever specialist you go to, will advise you on the hotel scheme. So there is a route to manage this, but this now goes down the long-term guest channel. It's got a different channel. Oh, hang on a minute. Some of the properties are owned by you. Big topic, this one. Is it owned by the company? So is the company an owner-operator and also operates others? Well, in which case, this now goes down its own particular channel. Maybe the property is owned by you and personally, but you're the director of the company or the owner of the company. Is the company a close company under the control of 5 or fewer people? If it is, are you responsible for the fabric? Okay, that goes down a channel. Someone pays you a commission, somebody pays you on a profit share, whatever the deal is. Maybe you're working for a tired rent to SA operator and they know that they can get a profit share with you. Commission goes down one channel, profit share will go down another channel. You can see these channels now. What about the finder's fee? You're fully occupied. We've got a huge amount of staycation work, staycation stuff about to happen in this country. Thank goodness. You guys need some cash. Your properties are all occupied. You don't want to lose this guy. So what have you done? You've introduced him to your friend from the PIN group. Who's paying you a finder's fee? Yep, sorry, another channel. So each transaction has to be looked at individually, and you pick the channel that they go down. That way you can work out the VAT and keep yourself safe from a VAT inspection, because you will be inspected. I can't stop you being inspected. But when you're inspected, you can say, well, this is what I've done. I've put it all down in these different channels, and this is my sales. And they'll tick and bash you, and they'll get the little green pens out. And they love using the different colored pens, by the way. And they love it if they can use the red one with a cross. They love it. But tick in nice green pens. That's what we want. So, folks, I've done it again. I've managed to come within my sort of time frames I always aim for. Keep these things relatively tight. You've now hit the final two sentences of the 4 presentation series on FHL and SA. It's a super business. It is a wonderful business. It makes a profit. Well done. If you're involved, you've had to go through an awful lot of learning. Having to deal with the stuff that I talk about is really tough, and I know it is. But that's part of what makes it profitable. Because there are people who might be looking at this presentation saying, I'm thinking about it, but I've listened to Mark now for 4 sessions. Damn, I don't want to play with this. Good. It was a barrier to entry. If you don't want to do it, step out of the way. The guys that really want to step up to the plate, really going to learn this, get it straight, they're going to do it. Let them get on with it and move out of their way. So you've got lots of barriers to entry. And if you can stay the course, you can end up with a very profitable business. Look around, there's a lot of very profitable people out there doing rent to SA, FHL. So if it was easy, everyone would do it, but it's not easy. So well done for you if you're doing it. And hopefully your business is a phenomenal success in the FHL and SA market. And you have now finally reached the end of that presentation. That was
Brilliant.
Your to SA operator presentation.
Brilliant. It's actually been a really, really, really good series. Been one of those that I just thought has been one of the best we've done in a long time, because it's so detailed. There's so much stuff in there. There's so much information in this, and it's really worth just going back on the other videos. Some of the other videos are all in our units in PIN community.
Yeah.
We've just got one quick question that's come in, which was from Craig Sargent, which said, Mark, could you touch on flat rate VAT and its potential relevance or not?
Absolutely. We've got a yield rate there if you're using the TOMS scheme of about 5%. If you use the flat rate scheme, and if you're allowed to use the scheme, I'll say that in a moment, you're going to end up with a higher percentage. Is it worthwhile using that higher percentage? Now, the problem I have with the flat rate schemes, there's always this, we're human, for goodness sake. Show me the flat rate scheme and I can go through and say, am I a hotel? Am I this? Am I that? What am I? And you go, oh, that's a cheap one. I'll be that one. And you pick something because it's cheap. Well, sorry, that's not how it works. You're meant to define yourself properly. So once you define yourself properly, actually you'll find your VAT rate is higher than typically the VAT rate for a TOMS scheme. Point 1. Point 2, Craig. Can you use the flat rate scheme? Because we're now going to get back into you can't be a low cost operator. All right. So a low cost operator is not services. It's not services. So you've got to buy things. Now, realistically, what are you in your running your SA operation? What are you buying as goods? Tea bags, coffee, toilet roll. What else are you buying? You're not buying stuff. Okay, but you've got to buy enough stuff every VAT quarter as a percentage of your turnover to justify being in the scheme. So what you tend to find is people go down the flat rate scheme, they tend to pick a rate that isn't appropriate for them anyway. And then you suddenly find that you're a low cost operator, therefore you can't use it. Therefore, for this quarter, you've got to be out. Oh, this quarter I'm back in. This I'm still in. No, I'm out again. And then lo and behold, 3 years' time, HMRC come along and go, why did you pick that rate? Where's the written evidence of your care and attention to pick the rate that you picked? Oh, well, you picked the wrong one and you got no care and attention. You owe me 3 years worth of VAT because you picked the wrong rate. So the flat rate scheme is good. We use it. It depends where you're going to go with this. The ideal is obviously stay below 85,000 if you're going to be a baby operator. And yes, I've got some clients who monitor very carefully and go, yeah, I don't want to get involved in any of this mess, Mark. I'm making £80,000 turnover, and when I've got to that for the year, stop. I just don't take any more bookings. I force myself below the threshold. There are those that say, no, crack on. If you're going to crack on with it, you're probably going to find yourself into, I guess, the TOMS scheme because it's got the average lower rate. Damn good question, Craig. Well done.
Cool. As usual, we've, as I said, we've come to the end of the series of 4 that we've been doing here.
Yeah.
They are all in our units that we got. There's loads of videos in there, but all your stuff is in there as well. And I just want to make sure that I'll put a link a bit underneath this so people can go straight into the units and go and look at all the videos and stuff like that. If you want to talk to Mark, I've put the details up. I've put his email and his telephone number up. And my usual caveat to this, as always,
thank you,
is don't take the mick.
Yeah.
Don't take the mick. This is something which Mark does, which is really good. And it's, if you've got a query, if you want to sort of just like if you've got a question about something, then you can email it or maybe give him a call, but email it is probably the easiest one for you, isn't it, Mark?
It is. And let me just put a few words on that. The reason I'm doing this, well, first of all, Simon Zucci, I think, is the best of the trainers. He's a guy that is so straight. And even though he could make money by teaching SA, it's not something he does personally. Therefore, it's not something he teaches. But he knows that his PIN family are interested, so he's allowed me to do this presentation. So that's great. I respect people that take their education from good people. Hence, you can notice that I've used an email address there. It was PIN@. That just lets me know that you're a serious person. That lets me know that you've taken proper advice. And I respect people that take that advice. So hence PIN@. And just as I don't think I've said it in the last couple of videos, huge respect to Simon and all that he and all the rest of the team in PIN do. Brilliant.
Yeah, and it's just really sort of a give back. So if you've got a query, you want to start talking about some of these things, you can email Mark. But as I say, if Mark does any work for you, then you'll have to pay. I mean, don't think you're going to get stuff for free forever. So I always put that caveat in because people do take the mickey sometimes. The other quick thing that I wanted to say is we've got a lot of people who are on PIN Community right now, but they don't get our Saturday morning newsletter, which tells people exactly what's going on in the week and what happened last week, so you can go and see some replay. So there'd be a newsletter that comes out this Saturday would have the links for this video in, so you don't miss anything. This is the whole point of it. You don't miss stuff. And so not everybody's on that list. We've got quite a few thousand on there, but if you want to get that Saturday morning newsletter, then you can just go to pincommunity.co.uk/join-now, and it's just got a little form in there. You put your details in there and you'll get the Saturday morning newsletter as well, so you won't miss anything. Okay, so that's the most important thing. This has been absolutely brilliant. Is anything else to top and tail?
No. If I may just repeat the last time, please watch all 4, because you've noticed as I gave this presentation, I kept referencing back. You must get the whole story. Don't just read the last page in the book. Okay, that was it.
Brilliant. Just got one query about how to access the units. I'll put a link in below, but if you want to just have a look at the navigation at the top of the Facebook group, you'll see what is it? It's about discussion. It's got units in there, announcements, and more. So if you click on the units, it's got all the videos of Mark stuff and all the other stuff, all the other sort of videos that we do, all the live videos that we do. We put them in there as a bit of a library of videos. So. Okay, brilliant. Thanks very much, Mark. Great to see you again. And we'll see you probably in another couple of weeks, and we'll be hitting some other subjects.
2 weeks' time, I'm back. Yep, I know. Take care, everyone.
See you later, guys.
Bye.